What is up, Netix? How's it going? Long time no see. Um, Today we have a bit of a different video to the ones that we had like 3 or 4 days ago. Um, we have a bit of an educational video coming up, talking about this sort of a chart because you can see this. This is extremely chaotic, and this is a chart that I've been playing with for months now, like maybe, yeah, maybe half a year even. Um, and while this actually is chaotic, is it's organized chaos. So uh, I know what I'm looking at when I'm looking at this chart. And if you go to the lower time frames and you go to the price action that is relevant to you, it starts to clear out a bit. It can truly be a bit confusing if you look at this whole chaotic thing. But all of the levels marked here are extremely essential to all of my calls, all of my analysis, and just overall watching the charts. So, how do you get to this part of trading and analysis? We'll go to a completely clear chart, which I like to do from time to time, and this is basically how you do it. Like you go from the top to the bottom, like from the top to the bottom, going from the higher time frames to the lower time frames and charting out everything that's relevant to you. So let's go to the 12-month or the yearly chart. And just looking at this picture, which levels do you think are the most significant? At least now that we are trading at like 52k. Obviously, it should be these levels right here. Maybe this high, maybe this high. These lows aren't relevant at all anymore. Like, if we were trading here at like 25k, of course, 16.5 is relevant. But now that is a 70% drop away from us, I wouldn't call it simply useful and relevant. So that is something that we are not going to mark. But yeah, you pick out what you deem as relevant. So looking at this, we can do it in dark blue maybe, and just call it a 2022 open. So you do this just to make it more clear, and maybe this whole level, like yearly open, 24 open. Yeah, these are the most relevant. These little wicks, I don't like doing wicks unless they're big like this one, because they usually get covered in the monthly chart. Looking at the quarterly, do we have anything relevant? Mostly no. We'll get this in the monthly chart, but if we're looking at a quarterly, nothing too relevant right here. Like the relevant levels we've already went above, which is the 2022 open, marked already on the chart, and you can see this whole situation right here is relevant, but we already have it marked, so no need to clutter our chart more. The monthly, on the other hand, gives us a bit more intel, you could say, and we could potentially, let's see what we are working with here. This whole thing has a lot of wicks into it, so we might as well do this so that we make this whole level relevant. So the monthly, yeah, and we could do this and start charting out relevant levels. I like to do the monthly in dark red. So this is September 2021 high. I'm going step by step to you guys. I'm giving you free alpha here. If you don't want to listen to this, if you don't want to look at this, feel free to skip. Feel free to maybe speed up the video. But this is alpha. This is how I learned to trade. Like, charting is probably 60% of the work. Like 20% is psychology and 20% is execution. So 60% of what you do is charting out the price action. So if you take a look at this level right here, coincidentally, the high from this month is at 52,890, and this is at 52,940. Extremely close. So maybe we top out around there. I don't know. We'll see. Something that could also be relevant is this whole zone, like right around here. Closes above, wicks above, closes above. No substantial price action happened here on the monthly at least. So we'll call this 21 February high. Yeah, and we could, just to make it shorter, we could put a high here as well. So yeah, this whole zone seems like a good area for a retracement if we get into it. So keep that in mind. Basically, now we have charted out the whole bigger picture of the price action that we've had in the past 3 years. So keep that in mind. Going on the weekly, let's take a look at what we have here. Like what kind of price action we are trading here. This is a clutter of a lot of candles closing in the basically small range. So from the opens to the closes, like from here to maybe here, 7% range, which has had a lot of candle closes in. So that is a significant area, and we could potentially do something like this, like counting in every single one of those closes just to look for a retracement there. So we'll mark this out so it's not as obstructive to our chart, but it's still relevant information. So maybe even lighter than that. Yeah, just so we know that there is price action going on there. So on the weekly, now we have to start looking closer to where we are trading now. So we are trading at 51,825, and you could obviously follow this line and see that this is a significant level for the week. So we can mark this out, and let's pick a random color, right? Like maybe dark yellow. Yeah, why not? So now we know you could technically make a legend for all of this, but now we know that dark yellow, let's make it orange, maybe it would be better. Yeah, orange color is the one for the weekly candles, for the weekly significant levels. So this is obviously a significant level, like price action here, candle closes, candle wicks couldn't close the wick on the weekly above it, so significant price action there. So we need to look for getting over that. So yeah, let's look at what else we have here. So these are also significant on the weekly, obviously, as I said previously. Well, support for this week, but yeah, just do practicing of taking everything we have and putting it on the chart, and just being able to look at the chart. Like you wake up in the morning, you see the price going up, you see the price going down, it doesn't matter. Being able to look at a chart and seeing like, yeah, we are below or above the weekly level that is significant, is actually extremely beneficial. So that's why I like having these chaotic charts like this one, where this morning I woke up, I have all of this data to work with, like all of this data combined with the macro fib, combined with the fixed range volume profile, combined with these levels that are dating back to a few months ago. So if you have more data at your disposal, you'll be much quicker on making significant decisions when looking at the bigger picture. Like these are not the levels to look at if you want to trade the 5-minute chart or something like these that we are marking out right here, but these are just so you can grab your phone and see, yeah, we are above or below that and that level. I can do this and this. I should look for selling, I should look for buying. Like just giving you the picture the bigger picture of the market and where we are. So that is why I want to teach you guys about this. So yeah, I wanted to make a dedicated video. Like, this is something people pay for, at least in my opinion. I've spent months and years learning this, so I want to translate my knowledge as simply as possible and going in depth, step by step, going over all the time frames to make it as simple and as easy and as accessible as possible. So yeah, enough ranting, let's go on. That's basically it on the weekly. Like, we can maybe look for some candles here to see if we have something significant, like this one maybe, this level. As you can see, closed just below it, wicked here, some resistance here, like a deviation. I would say that that is somewhat of a significant level, like 48.8. But we could, just to round it up, we could put it 48,800. Just makes things easier. So making things easier is the way to go when you want to trade. So that is a significant level. Going below, maybe I forgot about that, because we could technically go below the 2022 open, but I won't like it. So the monthly, significant monthly levels, not that many actually. Let's go to the weekly and chart things out. This is a significant level, deviated above and down below, was a support for some time. What else is there? This, obviously, this whole clutter of orders around 38k. Like, yeah, we could do 38k. Like maybe this right here. All of those are significant weekly levels. Keep that in mind, weekly, because the bigger picture you're looking at, the more important it is for you to be aware of which candles you're looking at, if you know what I mean. Like, you want to know what you're working with. That is basically it. So 38k is probably the level where you could look for potential buys if we get there. Yeah, going on a daily chart is where things start to get complicated, because all of this clean price action, like, this is relatively clean, inefficient, yeah, but clean, gets a whole lot more noisy. Like, it gets a little noisier every time you go to a lower time frame. So weekly was still relatively clean, but as soon as you go to the daily, you can see the wicks and the candles going up and down like crazy. So this is probably where you'll get the most precise alpha, but also where it will be the hardest to find alpha. So going to the 4-hour chart doesn't really benefit you unless you're trading maybe this price action compared to this price action. The 4-hour chart will not benefit us if we look to trade this price action compared to this price action. Basically useless. Just like how people wanted to chart out these levels and being precise with it. Like, yeah, sure, you can go to the monthly and see, like, yeah, obvious levels, something like these weeks, like these closes, this high right here. Those are the obvious levels. Those are the levels that will stay relevant until the end of time. But if you want to go to the 4-hour chart and act smart and be like, yeah, on the 4-hour we are getting a retracement to like 29,630. Like, if you want to trade in the future, like when the price is trading here, and you want to use these candles as your relevant info, I guess, it is not the best thing to do, in my opinion. Like, you could play yourself by doing that. So going to the daily chart again. What can we see on the daily that is relevant for us? So most of the things that we have up on the chart are already relevant. So the daily you look to be the closest to your trading price right now. So I guess we could do this. This whole area is highly relevant, and we'll do the daily ones in black probably. Yeah, that's what I think works the best. So we know that orange is the weekly, black is the daily, monthly is the dark red, and yearly is the blue color. So you want to organize your colors just so you know them. Like, don't change them up. Keep your thing relatively clean and organized. So on the daily, these are relevant highs. Maybe even these. Like, you don't want to go like 20% above or below the price action that you're trading right now. So I guess 20% could be the limit. You want to chart out this whole range right here. So as we trade up, you look to chart out these. As we trade down, you look to chart out these. So what else is relevant here? This daily level. Yeah, probably these. These are really relevant actually, because you see wick there, couldn't close above there, basically couldn't close above there, wick there, had a deviation, and then went straight down. So if there is a really big and really confluential level, something I like doing is a red line, like a simple red line, just to know that that is a big level to go above or below. And as you can see, yeah, I remember I have this level also on my other chart, but struggle to get above, struggle to get above, struggle to get above, got above, deviated below, and now broke through, ran through like crazy. Since we've gone through this level, we've had a 20% move up. So really significant levels get marked in red, at least by me. So going back to the daily, looking at these levels, something that's also relevant is probably this, and I'll keep it at that, like for the downside. Like, these are the only relevant levels now. If you trade it down, I'll look to maybe chart out this right here, but you can see that it's already charted up by the weekly. So yeah, for the upside, do we have any extremely significant levels? Like maybe this whole area, but it's covered by the weekly. That's what I'm saying. The lower you go, the more detailed you go. The thing is, you'll have most of the things covered. Like this is relevant, but you can see that it is covered by the September high. But I guess we could leave it, maybe. But there's actually no need to, because this level that I wanted to chart out is completely covered. Like, the difference between these is 53.68 and 52.944. Like, $100 difference doesn't make a whole lot of difference. So that's why we are not going to just clutter up our chart unnecessarily. So above that, these right here get relevant. So I don't know if I want to go higher than that. Like, let's check. This is a 15% move. I guess we could go a bit above and say these right here, sorry. Yeah, which are obviously relevant. So that is probably all that we need right now. Let me just close out Telegram because it's making unnecessary noise. And you can see, like, this is a chart that you don't trade from. You have this chart just to be able to look at it and be like, yeah, we are above 51.8. If you want to go back and see 51.8, yeah, from here, the weekly chart. You go to the weekly chart, you see, oh yeah, this is a relevant level. Okay, we are above that. As soon as we close below that, I might turn bearish. So if we close above that, I may turn bullish. The September high is right above us. If we go above that, I'm turning bullish. I'm aiming for 53.7. Like, you have a system. You develop a system based on what you do with a chart. So my system works something like this. I have a chart like this one, where I like to look at it, see where the levels are, and be like, yeah, okay, this is the next move. What I also like doing is having macro things pulled up on this chart. So a macro fib is extremely useful, and you guys know I tweeted a bunch about it. So this whole thing makes it a bit more cluttered, but I guess we could do this to make it more clean, and don't extend the lines. Have it like this, and 15.46. Have it up to here probably, and coordinates 1546. Yep. Oh, or 460. Yeah, it was 460. My bad. 15460. And you got your fib there. So you see 0.75 is at 55.6. You could be like, okay, we are above this whole monthly September high. If we close above that, I'm aiming for 55.6. That is just an example. I'm not saying I'm thinking like that right now, because we are really overextended, and I don't know how much juice we have left. But I'm just giving you guys an example of how I like to think, at least when these charts are in place. So what you also can do, but I don't usually do it, I do it on the lower time frames. You could see doing a volume profile from maybe, if you're trading in this whole area, you could see with a volume profile, like up to here, most of volume is there, so you could expect inefficient moves to happen in the meantime. But I'm not going to go into too much detail when it comes to that. Something you could also use is the dual EMA strategy. You could keep it up on the chart, and how I like to set it up. Oh, I already have one set up, my bad. Place them all in the same color. One is red, one is blue. And input should be the fast EMA is 12 and the slow EMA is 21. That is a macro strategy, and you don't want to, I mean, you could, but you don't want to use it on the lower time frames because it's not as relevant. But if you go to maybe the 4 hour, but most likely the daily and the weekly are the ones that will be the most relevant. So you look for crossing, like the fast EMA. You know the fast EMA is in the red color. You know the slow EMA is in the blue color. So as soon as they cross, like you could see, they were a resistance right here. The red one was trading below the blue one. As soon as it flipped, look at what's been going on. Like if you bought this, it's on the 4 hour, but let's say here, if you bought here and held all the way through, you could see that you would be still in so much profit. And if the price starts turning around, something like this, you could expect the fast EMA to react something like this, like have a slower reaction than the price, and the blue one will be much slower. So usually they will cross somewhere around here, probably the blue one turning like this and the red one trading below it. So this right here, this crossing is when you want to sell. Like you don't want to hold your Bitcoin, and altcoins work differently, but let's say Bitcoin, you don't want to hold it as these two have crossed. So that is something to keep an eye on. That is something I've used in the past a lot. I saw that from the Trader XO, so you know it's a good strategy. Like this is also a good example. Red was struggling to get above. Like the fast EMA, the 12 EMA was struggling to get above. As soon as it crossed above, you could capitalize just by buying this. You could capitalize on a 80% move on Bitcoin. Do you realize what an 80% move is on Bitcoin? And if you sold here, bought back again, if you sold this, you'd have like a 10%, 12% loss. Buying here, you would get a 20% or even more, depends on where we top out. So the 1221 EMA is extremely useful. I mean, you could go on basically any chart, and going to the weekly would make it even more confluential. Like, just see, April 2020, we managed to cross above the blue line. So it's been going on all the way up until the June of 2021. If you bought on the crossing, let's say here, and sold here on this one, you would have capitalized on a 400% gain. So you need to utilize this tool, and just type dual EMA in the indicators. It's a free indicator. Use it. Trust me, you will benefit a lot from it. So that is most of the things that I wanted to cover. Like, you could use this chart in the next few months, and it will probably stay relevant. So might share this chart with you guys if you don't want to try it out by yourself. But what I can recommend is, when you watch these educational videos, doesn't matter if it's from me, doesn't matter if it's from XO, SZ, any trader you like I'd be proud if you guys watched my videos and managed to learn something from them. But it doesn't matter to me, I just want you guys to learn. So whoever's video you're watching, I recommend you guys basically just copy what we do. That is most likely how you'll learn. If you just watch this, yeah, you'll probably learn something, but just doing this and repeating it by yourself is how you will learn probably the most. So look into this, research this, compare it to maybe something you already know. If you have any suggestions, feel free to leave them down in the comments. Like, I'm an exponential learner. I don't think I will ever learn enough when it comes to trading. So any comments I'll probably learn something from you guys. I hope you guys can learn something from me. This chart is a pure chaotic chart, but I think there is a lot of value in it. So keep that in mind. Always have another chart for lower time frame things. This one should just be a ground rule when it comes to trading. So that is basically all that I have to say. I hope you guys found some value in this, and I'll see you guys in the next one. Rewatching the video that I just recorded, I realized how much alpha I shared, like how much knowledge that I've gained over the past few years I've shared in just one video, and realized how useful it is. And I forgot to mention how much likes and subscribes actually mean to the YouTube channel. Like, I'm happy with where we are. Like, getting 40 views per video is not that bad, at least for me, because I'm still relatively new. Most of the people who come in actually come in from the link that I share, and not I don't think my channel gets recommended to people yet. But subscribing would mean a lot to me, and maybe also liking the video if you liked it. Probably dislike it if you disliked it. Just give any feedback to the video so I can gain something from sharing the knowledge. So thank you guys for supporting me, and I'll see you guys in the next video. Peace out.